Amgen stock ticker AMGN is one of the world's largest biotech companies. They're currently trading at $234.81. Year to date, they are down around 10%. If you zoom out a little bit more to 1 year, you can see they are up around 1%. As many other pharmaceutical companies, they saw massive growth during 2022, but ever since middle of November, they have actually fallen down quite a bit. And if we jump into our stock screener, we can see here that the current PE ratio is around 12.5%, which is roughly in line with the 5-year average of Amgen. You can also see that the dividend yield is around 3.6% with a payout ratio of around 60%. So that is also looking really nice. It has a target price from the analyst of $258 with a target growth rate of 4%. Looking into the dividend data, you can see here that they actually are quite a good dividend grower. The dividend growth rate from the last couple of years is around 10%. The last 3 years is also around 10%, and the growth rate of the last 5 years is also around the 10%. And if we zoom out even more to the dividend growth rate of the last 10 years, it's actually 16.3%. And as you can see here in the dividend growth rate, even though the trend is decreasing a little bit, it's still looking really, really well with the dividend growth rate of around the 10%, as I just mentioned. Coming down here to try to give a number of value in terms of dividend yield theory, it's around 16% undervalued right now. And you can see on the graph here on the right that every time it goes into the blue, it could be a potential good bargain being undervalued, and ever since moves into the red. So this was around the middle of November where it was extremely high and thus was reverting to the mean PE ratio of around 13. Coming down here to the cumulative rate of return, you can see that the green line, which is AMGN, and the red line, which is S&P 500, is pretty much following it. So if you have invested the same amount of money over 10 years ago, you would roughly be at the same place right now. But let's try to jump into our different valuation models to see if we can find the fair value of Amgen. The first one is Graham's revised valuation, where we do take the EPS of the stock, combining with the growth rate, the average yield of AAA corporate bonds, and the current yield of AAA corporate bonds, and then we arrive at an intrinsic value of $134. The next one is the discounted cash flow model, where we have also taken the free cash flow from the different years. We have then combined it with an applied growth rate. I've chosen the same as the analyst's growth rate of 4% for free cash flow. We then use that to predict the future free cash flows. We discount them back to the present value using our discount rate of 9%. And then we take the cash on hand, the total debt, and then we arrive at an equity value, which gives a fair value of $217. The next one is a dividend discount model, where we do take the dividend payout from the different years and combine that with the growth rate. And if we use an average growth rate over the years and an applied growth rate, combining with the weighted average cost of capital, in this case, the growth rate is so high compared to the weighted average cost of capital that we actually arrive at an intrinsic value that is negative. So we cannot use this model for Amgen. It's better for more slow growing or more slow dividend growing companies. Using the multiples valuation, where we look into some of the peers of Amgen and using their EPS and their multiples, using the median multiple and the current EPS of Amgen, we arrive at a stock price of $246. Next one is the free cash flow valuation, where we do take the price to free cash flow ratio from the different years. Combining that with the free cash flow per share of Amgen, we arrive at an intrinsic value of $184. The last one is the Peter Lynch model, where we do have the growth rate, the dividend yield, and the PE ratio. Combining all those, we do arrive at an intrinsic value of $145. And before we jump into the summary, if you do enjoy these type of videos, please subscribe to the channel to support me. And then directly into the summary, where we do have all the valuation models we have used. In case of the dividend discount model, which was a negative, I choose to exclude that one, obviously. Then we arrive at an average intrinsic value of $185. The current price being at $234, the negative average discount being around 26%. Even if we applied a margin of safety of, let's say, 10%, the acceptable buy price would be $167. So right now, it still looks like Amgen is a bit overvalued, but according also to the dividend yield theory, as we saw earlier in the dividend data tab here, you can see that according to that, it should be undervalued right now. So it all depends on which kind of methods you prefer to look at and whether or not you do like the company in general. I think the dividend stats looks amazing for Amgen right now, with the dividend yield being so much higher and the PE roughly in line with the 5-year average. I would say it is a relatively safe time to pick up Amgen if you are interested in the company. Thank you so much for watching, and I'll be seeing you in the next video.